In this video, we will be sharing everything you need to know about REITs, like how it works and the pros and cons of this investment. Coming up next.
My name is Ying.
I'm Ivy.
Welcome back to the Financial Fitness channel. Our channel is all about money and self-development tips. So if you have not subscribed to our channel, remember to hit the subscribe button down below so you won't miss out on our future videos. Nowadays, buying property isn't as cheap as it was back in the 80s. Many people struggle to fork out the first initial down payment and also constantly worrying about the monthly commitment that they are binded to. If you face this struggle but still wishes to invest in the property market, then you can consider REITs. REITs stands for Real Estate Investment Trust, where many investors pool their money together to buy and invest in an income-generating real estate. The real estate generates income by renting out the property to their tenants, which produces rental income. So if you are one of the investors in the REITs, you are entitled to a portion of the rental revenue. REITs manages their investment like an individual property investor. They would expand and improve existing rental space or raise rental prices to boost their rental revenue. They might even purchase new properties to further boost the asset holdings and rental revenue. And since REITs are obligated to pay most of their earnings, you as an investor will be able to benefit from it in the form of dividends. Some popular examples of REITs properties are like KLCC and Pavilion, where its shops or offices are being rented out and the rental income generated will be distributed to the investors after deducting other expenses. So where are REITs traded and how often it pays out dividend? REITs are traded in the share market, so the process to invest in REITs is the same as how you invest in your Maybank, Genting, or any other stocks in the share market. And the minimum is as low as 100 ringgit. So the best part about REITs is, instead of forking out huge capital to buy and manage the property yourself, you get to invest in property with as low as 100 ringgit. But bear in mind that if you are only investing at a minimum, the dividend given may not be as significant. REITs dividends are usually paid out every 3 months or twice a year, depending on the fund manager. However, the dividends are not guaranteed. If all tenants face a hard time paying their rental and the REIT's expenses are high, there is a chance of low dividend payout or none at all. But what about its capital? Dividends depend on the revenue generated from the rental income, whereas the capital derives from the property appreciation value. Basically, how much the property is worth right now if they were to sell it. And usually property tends to rise along inflation because in general, when goods and services price rises, property prices increases as well. This is also the reason why many investors use property to hedge against inflation.
Real estate investment trusts do have its negative as well. Before you invest your hard-earned money in REIT, make sure you know the following things. Number 1, investment risks. Always keep in mind that investing in REITs does not guarantee your capital. Just like with any other stock on Bursa, investors might still lose money because of the REIT price fluctuation. Imagine if you had invested in a REIT that focuses on hotel line. That hotel REIT may perform poorly because of the lack of customers they have during the COVID time. So all in all, your actual return will still have to depend on the success of the real estate market you choose. Number 2, withholding tax. Even though REITs do pay an attractive dividend return, the dividend return is still subjected to tax, specifically withholding tax. The REIT's dividend to investors are subjected to withholding tax, and this is paid by the company. When the investors receive the dividend, it will be the net return after the tax deduction. Currently, the withholding tax is 10%, and this tax applies to local and non-local investors. So which REIT is the best? The good thing about REITs is when it comes to investing, it is not as complicated as investing in property. When you want to invest in a property, you generally have to consider many factors in order for you to ensure that you have a good investment return. Like you have to consider the location the quality of the property, the traffic, the maintenance cost of the place, and many more. But with REITs, you just have to consider 3 factors. And with these 3 factors, you will be able to choose the best REIT stock for you. The first factor is the management quality. Imagine 2 shopping malls, both in the same location, but one is full of tenants with many shoppers, while another one has little to no tenants and hardly anyone has ever entered that place. Ensuring that the property is well maintained and functioning is the responsibility of the management. They are the people who is in charge of filling up tenancy and even attracting traffic so that when their tenants receive more business, they can also maintain the rental consistency. So when you choose a REIT stock, it's important to think about the quality of the people in charge of the property management. Because to ensure the long-term success of a REIT, the people in charge need to do their job well. Number 2, types of REIT. As Ying has mentioned before, there are many types of REIT, and whichever type you choose will determine how good and how stable is your payout. Different type of REITs investment can do better or worse in different economic situations. Like when the pandemic hits, the REIT in hotel line may not perform as well as the REIT in industrial line. Therefore, before you choose a REIT, you should always consider the underlying form of real estate. The third one is the valuation of the REIT stock. Always keep in mind that investing in a REIT is not much different to playing in the game of stocks. Generally, you win the game if your stock price appreciates higher than your buying price. So always take into consideration whether the REIT you are interested have great potential to grow for the long term in order to avoid loss of volatility. Because like Warren Buffett liked to say, successful investing is a marathon, not a sprint. So as an investor, it's important to discipline in your approach and be patient enough to trust the process.
If you're looking to build your wealth and have a worry-free retirement, check out our website at the link down below, where we have helped many of our clients achieve a worry-free retirement using a simple framework that we've created.
If this video has been helpful to you, then please do give it a big thumbs up and subscribe if you haven't, and we will see you in the next video.
Bye.
Bye.